What if XRP's price was never meant to be discovered by the free market, but revealed only when the system was ready? What if we're not waiting for price discovery at all, but price revelation? For years, traders have watched charts, candles, Fibonacci levels, and indicators, yet this single idea still shocks almost everyone. XRP may already have a functional price, agreed upon, not guessed. Not a speculative number, a required number. Because XRP is not being treated like a risky asset, it is being positioned as financial infrastructure. And infrastructure only works at scale. Scale requires liquidity. Liquidity requires value, not for attention, but for function. Behind the scenes, trillions of dollars move every day through systems most people never see. Depository trusts, central banks, the IMF, SWIFT, Wall Street, global settlement layers. This is where serious participants separate from the crowd. They don't wait for headlines, they position before the switch is flipped. The idea is simple. Years ago, major financial institutions recognized a problem. Global payments are slow, expensive, fragmented, and inefficient. If a bridge asset were going to sit at the center of global value transfer, it could not be cheap, wildly volatile, widely distributed. So what happens next? Price discovery is delayed. Uncertainty is introduced. Lawsuits, fear, and confusion push retail participants away. While people argue online about whether XRP is dead, the infrastructure is built quietly in the background. From this perspective, the SEC lawsuit was not random. It was not incompetence. It was a delay mechanism. Time was required. Time for regulation, time for liquidity corridors, time for institutions to accumulate without attention. Here's the part most people miss. A low-priced asset cannot move massive value efficiently. If XRP is cheap, enormous volume is required. That creates slippage, instability, and risk. If XRP is expensive, smaller amounts can move massive value smoothly. That is efficiency. That is stability. That is infrastructure design. This is why Ripple's CTO, David Schwartz, has stated that a higher XRP price is better for payments. That single statement destroys the idea that Ripple wants XRP to stay cheap. They don't. Cheap does not work at scale. Now connect this to a critical development. XRP has been accepted as collateral in regulated derivatives markets. Collateral is not traded, it is locked. And when assets are locked on institutional balance sheets, they disappear from the open market. That changes everything. Collateral assets are held for stability, risk management, and settlement. They are not flipped. When XRP enters this role, it stops behaving like a trade and begins behaving like core financial infrastructure. This creates a supply shock, not driven by hype, but by institutional necessity. At the same time, regulation is becoming clearer. Laws such as the Clarity Act are redefining how digital assets are classified and used. XRP is increasingly treated less like a speculative token and more like a neutral settlement asset. This is why traditional chart analysis starts to fail. Infrastructure is not priced by RSI or moving averages. Highways are not priced by candle patterns. They are priced by utility, necessity, and throughput. Now consider the final piece. Today, banks rely on pre-funded accounts for international payments. Capital sits idle in foreign countries doing nothing.
XRP removes that inefficiency. With XRP, no pre-funding, no waiting, no idle capital. Value moves in seconds, not days, not hours, seconds. And the end user never even knows XRP was involved. That is how real adoption happens, quietly. So when people ask, why hasn't XRP moved yet? They're asking the wrong question. The real question is, why was it ever this low? This is not a hype-driven bull run. It is a structural repricing. When infrastructure goes live, price does not climb slowly. It resets. This is not financial advice. This is about mechanics, and the mechanics are already in motion.